What's up, traders? Have you ever been burned trading an IPO and made the decision that maybe it's time to start looking for a strategy to enter your trades with greater precision? Well, if so, you're going to love today's video because I found a chart setup that looks a lot like the chart setup of Facebook Meta before Facebook went on its epic run from $30 to over $500 a share. The name of the company is CHYM Financial, symbol CHYM. And CHYM conducted its IPO and started trading in early June of last year. It was a hot IPO. That means that the very first few trades were much higher than the IPO price of 27. It first started trading in the low 40s. And it proceeded to drop almost immediately. Now, it continued to drop for several days and well into a couple weeks before it finally found its footing. Now, the thing that was so interesting about the CHYM chart is the comparison. Let's pull up the chart on Facebook Meta after its IPO in 2012. That chart looks almost identical to CHYM, doesn't it? Very close, at least. And especially the very first way it started trading. So once again, CHYM started trading at 42, and by November, it was down below $20 a share. Facebook started trading at 40, sold off immediately a lot like CHYM, had a bounce a lot like CHYM, continued a lot lower a lot like CHYM, and was down over 50% several months later, a lot like CHYM. So was there an entry point in Facebook that we can see a possible similarity in CHYM? First of all, the charts look very similar. Now, I'm going to point out a couple different ways where we could enter. So if you're considering entering CHYM for either a trade or for potentially to buy it at a discounted price, that's what I'm going to do in today's video. Now, we have this big gap here from 26 to the low 30s range. Now, check this out. Similar gap with Meta back in 2013, a year after its IPO. Very similar to CHYM, a gap from 26 to 34. So the gap a little bit higher than CHYM's gapped, and it continued higher. The reason for CHYM's gap is right here. So CHYM reported its second quarter 2026 financial results, 27% year-over-year revenue growth. That's very rapid growth. And most importantly, while they were growing that fast, they earned $28 million and reported their second consecutive quarter of positive net income. Now, while the stock was dropping after its IPO, the company was still unprofitable. So you'll see that frequently where the market gets tired and starts wanting to see profits before they really jump in. And that was the case here in CHYM. Now, after 2 quarters of positive earnings, the market might be anticipating more, but at the same time, the big buyers are probably going to be looking for a discounted entry price. So I don't see any major support levels all the way until on the daily time frame till 22. So what I'm going to do is I'm going to change the time frame to hourly, and we can see more support levels. Now I'm going to identify 3 support levels for 2 purposes. If you're looking for a bounce trade, a really aggressive bounce trade, a slightly less aggressive bounce trade, and then a good discounted bounce trade. Or if you're looking for a lower entry price, once again, if you like CHYM's long-term prospects and you want to hold for a long time, but you want a discount, this will be a good exercise for you too. So there's a support level right here. Our first support level is pretty aggressive, but it has bounced off this level twice. It bounced off that level Wednesday of last week, and just this morning it bounced off that level, and that's the 30.93 to 30.13 price range. So there's support level 1. It's pretty aggressive because it's pretty close to the high of that big gap. So here's that big move in just a few weeks. We're still pretty high in that big move. If you're looking for a little more of a discounted price, a little more conservative, not totally conservative, but a discounted price, 29.54 to 28.71. Now, the way to trade one of those 2 levels would be to have your entry point at the high point of the zone there and a protective stop just below the bottom part of the green shaded area. So there's our protective stop, is the red dotted line. Now, if you're going to take the second support level, want to make sure that your stop is firmly in place there, because notice here the gap, when we gapped higher, if the second level doesn't hold, that gap can fill rather quickly. We've seen that in a lot of stocks in the past. Now, there is a third support level if you're looking for a more substantial discount, and that would be right here. I'm combining 3 hourly support levels to make this level here, by the way. So the first level, they're so small, these little flags. So there's a flagpole, there's a little flag. Flagpole, little flag. So anytime they're flagging, that's a support level. So I'm combining these 3 support levels and calling that one support level. You can put your protective stop just below that level. So aggressive support level, the Goldilocks level, not too hot, not too cold, and then the more conservative entry would be if there is maybe a sell-off in the market or a major pullback to fill the gap to the 26 price range. More conservative entry, one of the risks would be maybe we don't get down to that level to get filled. So 3 support levels to consider for either a quick bounce trade or a longer term entry. Hope you enjoyed today's session. I'll be back more frequently with chart setups like these on a more frequent basis during the course of the week. Hope you enjoyed the session. Wish you the best of luck in your trading and investing in the remainder of the week. We'll see you soon.